Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, May 22nd, and we'll see how things look for Friday, May 23rd. At the start of Thursday's session, the S&P opened lower, danced around the unchanged mark, and briefly crossed above the daily pivot at 58.71. However, late-day selling pressure led to a modest decline of 0.04%, leaving the index virtually flat. Trading volume remained below average, consistent with recent trends, unlike the elevated volumes seen during April's declines. Moving over to the bond market, the 10-year Treasury yield remains above 4.5%, closing at 4.55%, a level that continues to raise concern for equities. Meanwhile, the 30-year bond, which climbed up over 5%, remains at 5.06%, signaling pressure from rising rates. Thursday saw the most economic reports being released. Initial jobless claims came in better than expected at 227,000, compared to a forecast of 232,000. However, continuing claims ticked up into the 1.9 million range, suggesting a stable and not overly deteriorating labor market. The global U.S. manufacturing PMI rose to 52.3 from 50.2, and the services PMI climbed to 52.3 from 50.8, both indicating economic expansion more on a global basis. On the downside, existing home sales fell 0.5% month over month to an annualized rate of 4 million units, missing the expectations of over 4 million units and down 2% year over year. The Economic Output Composite Index showed a slight decline but no strong recessionary signals. Turning to market sentiment and technicals, sentiment remains positive at 66 but is trending lower. The VIX sits above 20 at 20.8, reflecting moderate uncertainty. Short-term indicators are mixed, with the slope oscillator turning negative but still extreme positive, and the stochastics are starting to decline. Intermediate-term indicators such as the PMO and TTM squeeze are also showing negative momentum. Despite this, the S&P 500 remains above its 20, 50, and 200-day moving averages, keeping the short, intermediate, and long-term trends positive. However, the long-term trend remains in a downtrend, as the 50-day moving average is still below the 200-day moving average. On the policy front, the House passed a reconciliation bill raising the SALT deduction cap to $40,000, delaying Medicare work requirements until 2029, and increasing the debt ceiling by $4 trillion. According to the Tax Foundation, this could boost GDP by 0.6%, but it also adds $3.3 trillion to the deficit over the next decade. In sector performance, growth stocks led the way, with strength in tech and discretionary, with names such as Nvidia, Microsoft, Amazon, and Tesla. Defensive sectors, including staples, healthcare, and utilities, lagged behind. The financials weakened, showing a bearish MACD crossover. In other markets, the U.S. dollar briefly crossed back above 100, but ended up closing below that level, remaining in a downtrend. Oil prices ticked down and are getting to the $60 level, shrugging off rumors of Middle East tensions. The equity risk premium remains low, and stocks appear overvalued based on the forward PE ratios and inflation expectations. Looking ahead to Friday, May 23rd, on the economic calendar, only new home sales data will be released. Geopolitical risks always remain a concern, with potential escalations between Russia and Ukraine, India and Pakistan, or the Middle East are always on the radar. Seasonality trends are mixed, neutral to negative for the Dow and Nasdaq, but neutral to positive for the S&P. Historical data shows the week after options expiration is up 2/3 of the time, going back to 1980. However, post-election seasonality suggests potential weakness before a month-end bounce. From a technical perspective, the market remains positive across the short, intermediate, and long-term horizons, but shows signs of vulnerability. Declining momentum and overbought conditions continued, coupled with Wednesday and Thursday's losses, suggest a more negative bias. Conviction buying is needed to reverse the trend. Key levels to watch include the 10-year yield, which needs to drop below 4.5% to help support stocks, and the daily pivot points, which are updated on the YouTube Community tab. The market is currently trendless in the intermediate term trend with a cautious outlook. In summary, the market stabilized on Thursday but lacked conviction. Rising yields and mixed technical signals call for caution as we head into Friday and the 3-day Memorial Day weekend with the markets closed on Monday. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available or to access the daily newsletter, please click on the links below.